we started with this. I'm just quickly going to revise everything, but quick. So the first one, we said Smith paid in settlement of his account. So the word settlement immediately refers to everything is paid. So you have to make sure that is actually like a little clue for you to tell you, oh, this thing is a bit dark. No, it's a clue for you that there's going to be discount. So just be aware of that. Okay. So if I look at the 165 and I go back and I look at the balances, I see he owes 180. And that's how I get the 15 Rand discount. Okay. The next one, this guy pays 120. Can you see this is what he pays? So this is your bank, right? And we give him 30 discount. That's why his debt decreases with 150. Remember, I also told you because they didn't specify if he paid cash or direct deposit or EFT, I will take both as right. If you did that, you deposit the money once, or if you deposit the 165 and the 120 was paid indirectly, then it means that 120 will not be in the analysis. We've done that. Then we receive 300 Rand in settlement. We've already established that word is going to tell me there's a discount. And I can see the discount is then going to be 20. Then we sold goods. And they don't say credit or cash, but they do say invoice. And that's why this is going to the DJ. Here like this. Right, it goes to the DJ. Now the next one, I explained to you yesterday, but I want to explain it to you again. So we have a petty cash. Now remember yesterday we looked at the pictures. Nah, let's just go get that picture again of a petty cash. So we have a little petty cash tin box, whatever, nah, and it basically looks like this. So that little tin, on the inside, we will have, like we can see here, let's go a little bit bigger. Ooh, let's go home. Page is not found. Okay, don't worry. But can you see there, there's the money and there's the coins, right? So that's a petty cash box. And every business has got a petty cash box with cash in it for cash transactions where we don't want to go make an EFT or we're not able to. Let's say someone just comes to wash our windows today. We don't have their bank accounts or whatever. We want to pay them cash. So then we take money from the petty cash. The milk in the fridge is finished. Remember, every business has got a coffee station for their workers. So now I send one of the workers to go buy coffee. I give them cash from the petty cash. Now what happened in this case is that Mr. Smith bought goods from us and we had to send the goods to him, deliver it to him. Now remember what we said, whose responsibility is it to have goods delivered? It's the person who owns the goods, the responsibility. So in other words, the moment Smith bought the goods, it became his property. So it's his responsibility to have it delivered to us. So now what we do is we pay the guy who delivers 30 Rand cash from our little petty cash box, right? And we deliver it to Smith. But even though we paid it, we're going to charge it to his account so that he pays us that 30 Rand back. Okay? So in other words, I will show that 30 Rand in a journal I call the Petty Cash Journal, which will look just like a CPJ. In other words, remember, a CPJ has a column bank, and then it will have what? Trading stock, sundry. That's my CPJ. And remember, when we do the CJ, we will have creditors control, trading stock, sundry. You guys with me? But now I also have a PCJ. So now what, I will still have my trading stock, sundry, but the way I pay is not cash. I didn't buy on credit. I pay out of the petty cash. Can you see that journal? It's going to look exactly like a CPJ and a CJ. It's just the methods of buying or paying every time is different. Okay, so we will also have a petty cash journal to post. And that posting principles will be exactly the same as the posting principles for all the other journals. Right. So if I go to the debtors control, I know debtors control increase debit, decrease credit. So the debtors control will increase in debt because I'm going to charge that 30 Rand to this debtor's debt. Next. And my contra is going to be petty cash because I paid it out of the petty cash. And then also, if I ask you to do this guy's debtor's ledger, did I ask you to do it? Yes. If I ask you to do his ledger, I will also put it in here because his debt increases with 30 Rand. Now I'm not going to show you how to do that now because I want you to think a bit about it. But also, when you are thinking about it, remember that your debtor's ledger works on the same principles as your debtor's control. If you write something on the debit side here, it will be on the debit side here. If you write something on the credit side here, it will be on the credit side there. This side is when his debt increase. This side is when his debt decrease. Now I can't give you more tips than that already. Ne? Okay. So let's go on. Next transaction. The 16th. They sold merchandise on credit to Kun for 120. So in my debtors journal, I will already have Kun 120. What's the date? The 16th. And obviously it's the next invoice. Now I need to calculate the cost of sales. But there's a little extra sentence here. Can you see what they say? They say this 120 was after 5% trade discount was given. Now remember I told you. Now let me repeat what I told you. Cost of sales doesn't change because the amount I paid for that product doesn't change because I sell it for cheaper. So I need to go work that sales price back to the original price so that I can work out the cost price. So that 120 is only 95% because we gave them 5% discount. So 100 over 95 tells me that this sales price, if there were no discount involved, would have been 126 Rand. Does that make sense to you? And now I'm going to take the 126 Rand and work out the cost. And if I look, they told me here the markup is what? 50%. So it would be over 150. And most probably my answer will be in cents. So I will round off. Okay, so how much is it then? Anybody? 64. It can't be 264. We want the cost of sales. So it must be less. 84. Is that what you also got? Okay. 84. You guys, this is something I'm going to test over and over and over and over again. And I need you to deal with this. To sit at home, go through it, make it logical for yourself. So what would I do different? What would I have done if I told you, if I gave you the 84 Rand? What if this transaction was exactly the same? I say, sold merchandise on credit to Kun, but I don't give you the 120. I say it originally cost 84 Rand. And we gave Kun 5% trade discount. Can you see? Now I work it from the other side. How will you do it then? Now you must know. If I have, they tell me my cost price was 84, né? Then I know if I work that 84 to a sales price, né? It's going to give me the sales price before the discount. And then I go calculate the sales price after the discount. You guys get it? So the one we work backwards. So it's literally, if I have to work it backwards, if they give me the 120, I will say the 120 times 100 over 95 will give me 126, ne? Sorry. Why do I do that? Yeah, will give me it should give you 126. And then the 126 I times with 100 over 150, and then I'll get to the 84. So you just see which way you are working. You always just reverse. Okay, so let me write it down. If I give you the cost price, your first step is to calculate the sales price before discount. Then your second step would be to calculate the selling price after discount. Okay? So in other words, if I go the opposite way, if they give me the selling price, let me just write here, if they give me the selling price, ne? And they give me the selling price after discount, my first step is going to be to get the selling price before discount, and then it's going to be to get the cost price. Can you see? That's how your steps work. So the next transaction says we sent a credit note. Now remember, it can also be we receive a debit note, né? Because they go together. The debit note asks me for an allowance. The credit note says yes. Okay. Now, to Smith. So Smith is this guy here. For goods damaged during transfer. She will not be returning the goods. So it means we are only going to give her a 18 Rand allowance. There won't be cost of sales involved. Why? Because she's not sending back the goods. She just saw like an opportunity to pay less. So the only thing that's going to happen here is that the selling price becomes less, so we make less profit. I'll answer you now. I just want to see it's A77. Question. Yeah, it's fine. It's fine. This isn't the AOL where you have to indicate there's no influence. If it's empty, it's empty. Yeah.
So, for the different loans, it always must be a credit note.
Yes. We use the credit note. Actually, the duplicate credit note. Because we always use the document we issue. Because remember, like I showed you that booklet. So in that booklet, I tear out the original, give it to the client, I keep the duplicate, and in the end I write up my books from that duplicate. The only original document that I use is an invoice if I buy on credit, because now I'm the client. It's the only original document that I will use. Okay, is everybody sharp? Let's go on. Kun claimed an allowance for damaged goods that he returned to us. Now Kun is this guy who got the discount, ne? A credit note was, he returned the goods also, ne? So the credit note was issued to him for 135. So I got Kun 135, that's the credit note. Now remember, the credit note is about Kun's debt. But I also want to make sure that I understand what the value is of the stock that I got back. So I know that 135 is after discount, né? Because he got a discount on those things. So now I'm going to do exactly the same as what I did here. And can you see, what I'm going to do is I'm going to do it in one step. I'm going to say that 135, I need to get the original price before discount. And then I can calculate the cost. Can you see? I don't have to go right equals this, equals that, because it's all timing. Yes. How do I know the discount percentage? Is I go back to the original where he bought it from me. Okay. Is everybody sharp? Okay. And how do I know it's those goods that were bought and not goods that were bought previously? Is if I go look at number 10, can you see there? He settled his account, so he doesn't owe us anything. So anything that's happening from here on is new transactions. It's on new goods. Okay, so now we're just going to total, and then we're going to start posting. Can we quickly total? Okay, so let me just record this. Can you see he returned more than what he actually bought? So that's a mistake on the question. Okay. So, it's not usually that won't happen. I'm sorry that confused you. Okay. So, I must just fix this on the notes for next time. Is everybody sharp? Yes. You guys are way too sharp for this teacher. Way too sharp. Okay. So now let's quickly do the totals that we can post. See, there's the totals. Okay, if I total this one, gives me 093,462. This will be 153. And what was Kun's cost of sales? So it's 95, ne? Okay. And Kun was on the 20th, and it would be 0978. Everybody sharp with that? Yeah, here we can see clearly that this transaction doesn't make sense. Okay. So, let's just be calm and follow the principles. So, next, trading inventory. We don't use the word trading inventory. What do we use? Trading stock. So don't get confused. Okay? Remember I told you this was actually a task given from the district. Okay? So sometimes in papers they use different words. Remember, if you go into a business, every business does their own books. As long as they follow the debit, credit, assets, liabilities, expenses, principles, they can play with words inside. And you need to get used to it. Right. So even if they just said inventory, you should have known it was trading stock. Okay. I'm going to quickly give you 5 minutes to do the trading stock T account.